So I know you only accept accredited investors into your syndication deals. Where do you find the accredited investors, or what kind of professions are they in?
Well, first, what an accredited investor is, and let's define that. That's someone who makes $200,000 a year annually. If they're single or if they're married, they're making $300,000 combined household income, and they've done that for the last 2 years with a reasonable expectation to then make it again this year.
Okay.
Another way they can qualify is if they have $1 million net worth, not including their primary residence. And then there's some other more esoteric ways that they can qualify. Those are the main ways.
Okay.
So that's who we're talking about. As far as their professions go, I mean, just high earning professions, doctors, lawyers, engineers, software developers, entrepreneurs, real estate investors, especially. I have a lot of real estate investors who want to continue to enjoy the tax benefits of investing in real estate, but they don't want to be as active because they've done they built their real estate portfolio, and now they want to take more of a passive approach. And investing in syndications is a great way to do that. One tip that I have for anyone starting out for how to find, because your question was how do you find them, or what are their occupations. Now, a tip for how to find them is to simply look at your existing network. And whenever I got started, I had investors from my advertising days invest with me because my previous occupation was working at an advertising agency in New York City. So that's one network, advertising for me, agencies. Another was people who had lived with me throughout life, from my college roommate, actually 2 college roommates, and then 1 roommate in New York City. They all invested with me. And the key for this is to find someone. First off, identify the different networks that you're a part of, and then find one person within that network, talk to him or her, and then when you speak to other people in the network, say, hey, I was just talking to Grant, and we thought you might benefit from this too. That way, there's never a cold call. Right. It's always a warm lead, a warm conversation. And we have that money raising tracker that we offer everyone. So everyone who's listening, hanging out with us, you can email info at joefairless.com, and you'll get the money raising tracker for free. And it lists out the categories in a spreadsheet that you'll need to track, and it's a plug and play model. So that's the approach. Really identify your network, and then be strategic about building one relationship within each of those networks, and then going from there.
So did you have your podcast yet on your first syndication? No. So there was no one who heard of you from the podcast yet?
What I did, that's correct, from the podcast. What I did do is, while I had my full-time job, I created a class on how to, whenever I started, I was buying homes, single-family homes. I bought 4 homes, probably 1 a year for about 4 years-ish. And I was teaching a class on how to invest in single-family homes while living in a market like New York City, which I was living in, but investing in a cash flow market like Dallas, where I was investing. And people who I worked with in advertising, some of the people attended that class. So I was already starting to become positioned as a thought leader in real estate, even though I had my advertising job full-time. And that helped me gain more credibility with investors, which is a big challenge. So that helped me gain credibility with investors from a real estate standpoint, and then from there, just built on that.
Okay. Do you ever see yourself not being on the active side of real estate syndications, maybe one day investing with a different syndicator and stepping back, kind of how some of your investors have done with you?
No.
No?
The reason why is because I do apartment syndication to accelerate the wealth of those around me as well as my own balance sheet.
Mm-hmm.
And the way that we do that is by offering accredited investors an investment opportunity that likely beats what they can currently get other places, plus has tax benefits. So in a couple decades from now, as I'm not as involved in the company, we will still have the company. I just won't be as much of a day-to-day or at all a day-to-day person. I won't be the primary person investors go to for questions about a particular deal. And instead, we will still have the company. We'll still have our large portfolio of apartment communities, but I will be investing passively and actively like I do now, just won't have as much of a role in the business.
Got it.